Good afternoon, everyone. Let's start our trialogue on innovations and opportunities in fintech, ASEAN perspectives. With us, we have Ms. Smita Aggarwal, Global Investments Advisor, Flourish Ventures, as our moderator for the session. As our panelists, we have Mr. Sopnendu Mohanty, Chief Fintech Officer, Monetary Authority of Singapore, and Ms. Surina Shukri, Chief Executive Officer, Malaysia Digital Economy Corporation. Over to you, Smita ma'am.
Good day, everybody. It's a pleasure to be here at the Global Fintech Fest. Thank you all for joining us, and I would encourage you to post your comments and questions for panelists through the session. We're extremely privileged that we can benefit from this huge platform of collaboration, sharing, and learning. I think one of the positive outcomes of this pandemic is that while the physical distances have increased, the digital world has brought us much closer. Southeast Asia and India have enjoyed a very special relationship over the past several decades. There are many common things that bind us all together: culture, ethnic population, diverse communities, rapid digital adoption, significant contribution by small businesses and informal sector. Increasingly, many Indian companies are expanding outside India to tap into Southeast Asia markets. A large number of Singapore-based VCs are investing in India, and there's a very high exchange of talent. Most of the regional unicorns have their technology and innovation centers in India. In the new world order, I think the importance of Asia as a growth engine is more pronounced than ever before. We have with us two people who have an explicit mandate to shape and drive the digital economy in their respective countries. Both have had an illustrious career with large private sector banks before joining government institutions. I'm really delighted to welcome Sopnendu Mohanty and Surina Shukri. Malaysia Digital Economy Corporation, the CEO, Surina is the CEO of that entity, which operates under the Ministry of Communication and Multimedia. Sopnendu is the Chief Fintech Officer of Monetary Authority of Singapore, the regulator of Singapore. And both Sopnendu and Surina have a vantage position as a policymaker and an ecosystem builder. Over the next 40 minutes or so, we will cover a range of topics with them to get insights on what we see as new emerging opportunities for fintech in Southeast Asia. Let me begin with you, Surina, and address the top of mind question, which is, what has been the impact of the pandemic? As you reflect over the last 3-4 months, where did you spend most of your time, and how have your priorities at MDEC been modified due to COVID?
Yes. So thank you very much. Good afternoon, good morning, I guess, to some of the participants. Very delighted to be here. And thank you very much for having me. So first and foremost, I'll start with, there's two perspectives. Number one, as an organization itself, we were also hit by this new adjustment. And so what I told my team is we ourselves have to put on our mask, our oxygen mask, before we can go out and serve the industry. So for us, digital readiness was always top of mind. And so pivoting to make sure that we have uninterrupted service was top priority. So the experience of leveraging digital technologies to run our day-to-day, we fully embraced that. And so there was no interruption of service. But what that meant also is that our biggest priority was translating that over to everybody else. Because I think what COVID really showed, when you have movement control, what surfaced was the fact that technology, in this case digital, is the thing that connects everybody together. It's the enabler during this time. And what we all experience globally is the fact that we now live in a world that's digital by default. So if you're not connected somehow, you don't have the skills, you are at a disadvantage. I mean, you're disconnected. And so this world of digital by default is what we're facing in right now. And what we found, what we all discovered the hard way, is that there are still many areas that are, there are areas that are thriving. So the digital champions, the people that are familiar with it, so they're still able to conduct their business without interruption. But for the most part, there are many areas that we will not as prepared. And I think like this we is not just the Malaysian we, I think it's the royal we. Everything from, it's where businesses ready to work remotely. So this is the largest experiment in terms of remote working. I mean, look at today, we're having this conference this way, where people engaged are ready to embrace, e-commerce, because that's, became one of the most essential services during this time. So, so this whole, we really started to see areas that's digitally ready and areas that are not. The silver lining in all of this, now that we're in this digital by default world, is the fact that we all embrace that now. Like we all know that the why is clear in terms of leveraging technology to continue to run our day-to-day operations. So digital by default. Now everybody is just starting to think about how. So how do we continue to go about our lives? How do we leverage technology? How do we leverage so that we can continue to run our businesses? And then how do we innovate during this time? Because along with COVID, there's economic disruption and whatnot.
Right. So what you said is absolutely right, Surina. I mean, there are lots of things that we had planned would anyway happen digital, but this whole process has got super accelerated given the situation. So, Sopnendu, you have been at this for the last 5 years in your current role and, driving innovation and developing a thriving fintech ecosystem. And of late, you would have seen both in India and in Singapore, the distress of the migrant workers came under spotlight due to COVID. The pandemic has also exposed the vulnerabilities of many other segments, small businesses, gig workers. How can fintech help provide a financial system that can work for these segments?
Hi, Smita. You can hear me, right?
Yes.
Okay, good. I think good you brought this question at the starting of this discussion. I personally believe, this is my personal view, the crisis showed that all the inclusion discussion we are having for the last 4 or 5 years, it really didn't work right through the crisis. And there's a beautiful article by Sanjay and my friend Gautam Vardwas from Inbox. They wrote a beautiful article and they said that right through the crisis, in the first month, we saw migrant workers leaving cities to villages. They could sustain themselves for a month. And if you have a proper inclusion plan for this bottom of the pyramid or migrant workers, they should be in a position to see themselves through some kind of retirement plan, some kind of a savings plan, or some pension structure for at least a month till the government benefits comes and hit their account. Yeah. Not having a system like that truly exposed, got truly exposed during the crisis. And this is not a story in India, it's a story in ASEAN market. And every place you go, this has truly come out very strongly that not having a sustainable financial inclusive product is a challenge yet to be solved for. I think from my perspective, time has come. We have to shift our gear. And I've been telling in many conferences that we have to shift our gear from productivity and efficiency to sustainability and resiliency. I think that's the new key term because that's how we should think about. Once you have a resilient and a sustainable system, you can think about productivity. But to me, productivity is a default. If you are doing digital transformation, that comes with it. You don't have to work hard towards productivity. It is part of the DNA of getting digital. Got to focus on a sustainable system where we are far more inclusive than we stand today. And I think through the crisis and coming out of the crisis, a lot of fintechs will start pivoting themselves to focus on this space because this has not only a problem to be solved for, there is also huge revenue opportunity. There are significant money to be made by fintechs if they think that way in this space, if you get it right, if the construct is rightly done. And as Surina was talking about, I think one of the quite evident in the market in ASEAN at least that a lot of small medium enterprise are rapidly picking up the digital transformation. And in our own policy action right through the crisis, we saw the demand for digital tools just went through the roof. Yep. So there is this appetite to digitize your own systems and processes. and hopefully get that whole experience down to employees and the consumers downstream. And recently, UOB and I think Dun& Bradstreet did a survey in ASEAN market very recently. 8 out of 10 SMEs responded saying that they will see a revenue drop. But 9 out of 10 did clearly tell that they want to invest on digital adoption. So there will be a budget reallocation in spite of revenue going down to tech world to get more digital services. So that's a huge opportunity. And here we're talking of billions of dollars of opportunity where people are going to shift their budget to absorb or to get access to these new digital tools, which will help them to get into this new digital ecosystem we are talking of.
So I will add to that. So coming back to the behavior of SMEs, the big change really is before everybody was thinking that it's optional. You know, adopting digital is an optional thing. And then it's always like, no, you go first. No, you go first and you go first. There was a little bit of hesitance. Now I think there's no question anymore. The awareness is there. Everybody, there's this hunger for the how, like what do I do? What's the next step? So therein lies the opportunity, huge opportunity for fintech specifically. I'll also add on the fintech side. So you touched on migrant workers just now, and you touched on government, and so one of the big challenges that governments all over the world is facing, Malaysia included, is when you're trying to get distribution out. When you have funds that you're trying to distribute, the distribution mechanics is not all fully perfected just quite yet. Historically, we've got funds, but how do you reach a very mass audience? And so, for example, one of the challenges when we had our stimulus funds, because some of that was still, there's a real large chunk of the population that was still, that haven't adopted digital yet. And so how do you get it out to the folks that actually need the funds, and that have historically been more familiar with walking into a bank and getting a check delivered. And so there's this big opportunity really for fintechs to come and help plug in that gap. And so on our side in Malaysia, one of the ways that we are, we continue to build out to help with this distribution challenge is, of course, e-wallets. And so one of the things that was announced as part of our stimulus package is some vouchers via e-wallets, but that's ultimately, it's twofold. It's like stimulus to the consumers, but also to help drive adoption so that down the line, we can easily do the things that the government can more easily do the things that we need to do, i.e. reach a large population. But that's where fintechs come into play. They're a big opportunity.
Yeah, you're right. Actually, in current times, we've seen many governments, including India, use digital infrastructure to transfer benefits to individual citizens in a very seamless way. And this is certainly using e-wallets or using bank accounts or using a digital transfer is certainly a far better way than sending checks, as we saw happening in the US. So the ability for doing this, and also both of you mentioned about SME digitization, and I think the consumer behavior towards or a willingness to try digital has clearly shifted. But what is required to make it relevant and possible to them, I think, is a function of the overall infrastructure that is laid out that makes it feasible and affordable for the smallest value transaction to go through. And I would like to, focus a little bit around, the infrastructure and the digital rails that the countries have put together to make this. And we know many countries have already got a digital identity, interoperable payment system, e-signatures, and we've seen a lot of that getting used in times like this. But what next? What is the next stage of evolution for the financial sector? And Sopnendu, I know Max has already plans to introduce central currency for the wholesale sector. What really is the rationale for it? And, how do you see the ecosystem benefiting a move like this?
Okay, you have asked a lot of questions in the short line. There's a question on infrastructure, there's a question on digital
Yeah.
currency, there's a
I was,
question on...
I was
so,
trying to write them all
Pack a
down.
lot of things in the time that we have.
so that we have, so Surina has something to respond. So let me quickly run through these three questions. On the digital infrastructure side, ASEAN markets are rapidly moving. This is one thing I think ASEAN markets should be extremely proud of, because they have, you ask any policymaker, they are quite obsessed with the idea of digital identity. They are quite obsessed with the idea of getting the payment system upgraded. 9 out of 10 ASEAN market have an RTGS system. So it's a great start to have in a market which is so diverse. You go and ask any of the policymaker, they're working very hard to put data infrastructure so that there's a public access to good data to provide services, that value services on top of what they do today. So that's on the infrastructure side. But one striking shift, which now the market has done, is the issuance of new digital bank licenses. I think that's something fintechs in India must look for too. I think this is something different, and I want to spend a minute on that. Out of the 10 markets, 6 markets have issued somewhere between 20 to 21 new digital bank licenses, largely retail licenses or something around wholesale licenses, wholesale bank licenses, which means this market will have a futuristic construct of financial industry, which will serve this huge segment in a very different way. And this is where the new construct, the new infrastructure will be played out, the new APIs, the new B2B fintechs, they'll be the new plugin to this new infrastructure. And having 20 plus new bank licenses, new bank construct, clearly creates an opportunity to digitize faster, also adopt a lot of new technologies from outside wherever they can get the best solution. So that's on the infrastructure piece. You also asked a question around digital currency. I'm trying to get through very quickly so that we don't lose time in this whole process. There are two kinds of digital currency. I think the one which MAS speaks a lot about is the wholesale side. Why we talk about wholesale currency? Because wholesale currency, if you think about digital currency, there are two ways to think. There's a monetary thinking and there's a payment innovation thinking. Wholesale currency is around payment innovation. It fixes a classic problem around settlement efficiency of moving money, especially when it comes to cross-border. So this obsession we have to get the wholesale currency right is to solve the cross-border payment issues which still exist in this market. And that's where we are pushing for. And lastly, to end my thinking around on this, what is happening on the infrastructure space, we're also looking at connecting all this national infrastructure among each other, because interoperability, data streams, being able to talk to each other with thoughtful policy becomes a key enabler for the market to operate. And to end this up as a top to this whole beautiful plan is there are platforms around SMEs which are coming up in this market, and they are digital platform. One of the initiatives which MAS has been pushing hard is build something called SME connectivity platforms, and is interoperable, it is open, there's no proprietary closed loop system. How to bring SMEs to the digital platforms, connect them, is a key infrastructure push for the market. Huge opportunity for fintechs to play in this space.
Thank you, Sopnendu. Actually, you've covered a lot of ground, and I do have follow-up questions on each of those points. But let's come to Surina first on the digital bank licenses that Sopnendu talked about, and Malaysia has also announced intent to issue new licenses. My question to you is this old wine in new bottle? What really are the gaps that the new bank licensees be able to address?
I think it's new players. So it's not just old wine and new bottles, but I think it is new players. What we hope to be able to see would be non-traditional players. Not just banks. So it's not just a license for existing bank for the digital aspect of it. So we hope to be able to see that, and it's really good and encouraging, because what we want to see, to Sopnendu's point, is innovation. We want to make sure that from a payment standpoint, from an experience standpoint, from a customer targeting standpoint, you start to see innovation, and that's part of the aspect of opening up to these licenses. I want to add one more thing. When you talk about digital rails, when you talk about infrastructure, when you talk about building all this up, a key important component to this equation is the cybersecurity aspect of it, and the awareness around cybersecurity. So one of the areas that caught my attention, it was always on the radar, but it just reemphasized a little bit more, is as we continue to drive adoption on the fintech side, drive adoption on the digital economy side, increasing digital literacy. Yes, we all talk about digital literacy, true, but digital literacy around cybersecurity is really important as well, because as more activity is developed on the business side, the scammers are all starting to be equally just as active. Like every other day you hear about fraud, you hear about scamming activity, so that's something that we need to continue to invest in, just cybersecurity, and then awareness around just literacy, and how do you keep yourself safe, how do you protect your passwords, how do you manage your online lives.
Sure. No, absolutely. That's a very important point in terms of, as the world is becoming digital, there are new risks that we all have to be aware of and address. Coming back to you, Sopnendu, on the bank licenses that you talked about, it is believed that actually every company will be a fintech company with finance embedded as part of real economy use cases, whether you're an e-commerce selling a cab, or you are a small social commerce thing. So how does regulation need to respond to this? So is the solution that everybody needs to apply for a banking license, or is it possible to regulate based on activity rather than entity? And I know there's some work that Singapore has already done in that aspect. So say a little bit more about regulation of activities versus new licenses.
Good. So I think there's a question you asked. I want to use that as an anchor and come back to the license question. When I look at all the applicants who have applied to the digital bank license, there's a distinct difference between the applicants, the way they're thinking about banking versus incumbent. And every applicant, and that's true for Malaysia, I'm sure, and true for Hong Kong also, every applicants are coming with a consortium construct. There's a domain expert, there's a company who understands this space well, there's a company who does tech well, and there's a company which owns some kind of platform, whether it is a car hailing platform, or they're running SME platform. They're all coming together. They're pairing together, trying to construct a bank which has the best technology, which has the best domain knowledge, and they have a captive consumer who they cater to. And when you bring this three parts together as a banking, as a financial institution, you actually have a remarkable, highly potent construct of a new kind of 5G banking companies. On top of that, Asia is moving from 4G to 5G network. With this new 5G network coming, the speed and the latency, which are all going to get far better, you will see video banking, immersive banking, they'll all come together, and all are going to come together on top of national rails which are getting developed in the ASEAN market. So you have a new constructed digital banks, which has got a pre-construct which is highly efficient, which is going to run on a national rail, and they are going to be serving the consumer in a far better way than what we see today. So that's the banking structure. When it comes to licensing, yes, we have started picking few of the old construct of entity-based licensing to activity-based licensing. The good example would be in Singapore, 2015, when you started looking at fintech, the payment licenses was a single big license, where whether you are running an acquiring service, or you're running an e-wallet, or you are going to run a payment infrastructure, pretty much the licensing framework is exactly the same, the obligations were exactly the same. But we took 4 years to unbundle our payment license. As in fintech world, they unbundle themselves to small services or value services, we have unbundled our licensing framework to 7 small modular activity-based license. Just to make it easier for the audience to understand, we have modularized this license to the activity we are doing, and the risk and the regulation is addressing the risk which comes with that particular activity. So shifting that regulation to an activity regulation for certain key areas will enable better innovation, will enable far efficient licensing and supervision of this new entity. Our aim is to ultimately get a thoughtful, well-covered license for all fintech players, because thoughtful licensing brings far better financial stability, and rather than leaving them on the side and call them shadow banking. You don't want that word shadow banking to be assigned to fintech. They need respect. They need to be part of the licensing system.
That's very helpful to understand. And I think of all the layers that you talked about, you explained the regulation, you explained the tech layer, the consumer ownership, the banking domain. There's, one important piece of this whole layout increasingly is data ownership and data usage. And that's the new battleground in the digital world. So how do you see that framework and how critical is that framework for this entire architecture and the financial services sector to actually be effective to the most vulnerable and the most excluded?
You're asking question to whom?
So both of them, why don't you start, Sopnendu, first?
Okay. I think your question can be rephrased in a current terminology called open banking. And open banking in a way is an elegant way to explain ownership of data and more liberalized access and sharing of data. Let me use that lens to answer to your question. There is an open banking construct in Europe and UK, which talks about consumer can tell the banks, give me the data to my third party, let them do the service which I choose to take from them. I think in Singapore, and I'm sure Surina will come in our thinking, we believe open banking quite differently. In the Singapore, let me put the Singapore construct. It's very simple. We are putting a public infrastructure, private-public infrastructure, which is going to go live end of the year, where every financial institution are going to participate. They're going to contribute. There's an API service where consumer can authorize a bank, one of the preferred bank, to pull all data from the other participating banks and insurance company and the provident fund institution to see data in one place, and hopefully that bank provides value-added service on top of that. So data becomes fairly easily moved around, aggregated, and can be viewed more efficiently. But we have put a principle in place, and that kind of answers your question. May not be the perfect answer. We believe when you think about a platform like this, which is where the data can be moved with proper consent, there has to be some obligation by the participant. You can only participate if you can contribute. It should not be an unfair game where people who are contributing can only give, but they cannot take. So we are trying to figure out a principle where there is a equal fair play participation between third party and the banks, where both are contributing data, and hopefully that creates a much more fair play sharing of data. But that's domestic. The big unanswered question is cross-border.
Yes.
The moment you hit cross-border, everything breaks. Nothing works. And there are a whole set of unknown regulation, unknown policies, or unclear policies, which it doesn't make it easier now. So I think there's a big effort. Hopefully, during COVID-19 or post-COVID-19, policymakers will be able to go back to the drawing board and think about how to share data for a greater economic prosperity of this part of the world. And I think that clarity around cross-border data sharing will be a critical enabler for a post-COVID-19 recovery.
Cross-border collaboration in data sharing, in fact, as we move to the digital world, the national boundaries are becoming less relevant. You can actually see, companies can cater to customers across multiple countries from a single location. So, Surina, if you could cover not just the data aspect, but the broader aspect of cross-border collaborations, so that you can actually see the overall size of the market grow and not restricted only to what's possible to do in one single country.
Yeah, I think the whole cross-border consideration, cross-border collaboration part is a very important piece, because after all, when we talk about Southeast Asia, when we talk about ASEAN, we say, you know, it's a huge opportunity, 650 million consumers in this market. And so if we don't collaborate between one another, of course, there's different, there's variations in all the markets, but if we don't start collaborating and continue to focus on this collaboration to make sure that our things are all interoperable and can easily cross, we're going to lose out on the benefit of the market. The good news is that conversations are happening in terms of cooperation. And then in things that are more easily understood, like commerce and trade, certainly on the e-commerce side, there's lots of conversations and dialogue that's happening to make sure that it's easy for products to, I think every single country now has got their cross-border e-commerce strategy, and conversations are happening and so forth and so forth. But we really have to figure out the data considerations part of it, because that goes then into the interoperability of payments too. You know, how do you easily do that? Because it all ties to trade. Now, the other aspect of you know where we're going towards, the world that we're heading is borderless too. A trend that we've started to see that we all need to start thinking about is human capital. Today, remote working, you know, you could be here, but your team is all around. So what does that mean from a business standpoint, and then also what does that mean from a government standpoint too? Like, how do you think about these things? What does it mean to actually be a Singaporean company or a Malaysian company when you know you have a distributed workforce?
Absolutely. Yeah, you know, distributed workforce, technology coming in from everywhere. And therefore, I'm kind of just doing a fast forward thinking to what both of you have been saying. Sopnendu, you mentioned about the digital currency being a tool to solve the cross-border payments. So are we, in some time in the future, would it be possible to see a single pan-ASEAN digital currency that would ease you know, all this interoperability of payments, trade flows, and can truly make ASEAN a single market per se for startups to be able to tap into?
I think if you talk about wholesale digital currency, you don't have to worry about single currency. By design, it allows interoperability in a far more efficient way. So, talking about single currency is a political question. It's got a bigger. And if I say something, somebody will report me. Is going to be I'm in trouble. But I can say that much, that the wholesale currency by design allows sovereign currencies in that form to be far more interoperable. We can build systems to have common payment, foreign currency payment settlement systems. We can do other things around it to make it easier. So my bet is that large part of the 2020, remaining 2020 and 2021 will be focused on three things when it comes to digital currency. Countries are going to focus on exploring how to get the wholesale part of the currency in some form. Recently, the Philippines Treasury announced they're going to issue their Treasury bonds on a DLT platform. When such thing happens, you have to settle this digital assets with a digital currency. So by design, a lot of this will come as part of this endeavor to put digital asset into public platform. Any digital asset will be backed by a digital currency, which will be a wholesale currency by design. Now, the retail currency still has a play. Cambodia, great example. My friend Sia Cherry, who's the assistant governor there, she introduced in a real-time in production grade retail digital currency called Bacom. Why she had to do it? Because there's a need in Cambodia to leapfrog the not having an RTGS system. So wherever there's a market force which requires a retail digital currency, they will go for it. But largely speaking, ASEAN will focus on wholesale currency. That will be the first step to the world of CBDC. I think the idea of a single currency is far away.
No, I appreciate that. I would, you know, we have another 5 minutes left, and I want to focus on two parts of the question. One, a lot from the capital flows. So my question, Sopnendu, to you first is, what steps are you taking to attract global investors to fund fintech innovation? And for example, what would be your message to investors to say why ASEAN is attractive and why investors should pour more money here?
Good question. That was the question I was waiting for. Okay. So look at the data. I think data is the best way to answer this. When at the age of COVID-19, I was really worried. Last year, I'm going to use Singapore as example. I'm sure every country has some example. Singapore last year did 1.2 billion worth of fintech investment in this market. I was worried because at the age of the COVID-19 in March, the numbers were going nowhere. And I was worried that this year the numbers will be somewhere in millions. But right at the starting of the crisis, till June, we could pick up close to $650 million worth of new investment. Almost a $500 million US money came in, close to $500 million US came in. But that number is fine. Thank God we got the number. But what is inside the number is the answer to your question. Almost large part of the investment, which was between March and June, went to B2B fintechs. Fintechs who are helping SMEs. Fintechs who are helping banks to digitize faster. If any of the SMEs out there in this market or any fintechs in India or wherever they are, they're trying to go to ASEAN market, my recommendation, come to this market, not looking for end consumer. Look for institutions which need digital tools. Look for SMEs which need solutions. Look for banks which need the automation. Come in and play here. It will attract a lot of investment because SMEs are the backbone of these countries. And if you invest more, you get more out of it. Go for it. Any B2B fintech are welcome in this part of the market. Again, let me repeat. There are 20 plus licenses have been issued. They're going to consume billions of dollars of new technology. That is not going to come from incumbent tech provider. Largely going to come from fintech providers. Go for it.
Yeah, and I would add on to that. So as governments around the world, Malaysia especially, we all realize the growth engine of this of our space is SMEs. And so what we've done on our side is really, there's this real big push. And so we at Avantech, we're super busy right now just helping to drive digital adoptions amongst SMEs. So already in budget 2020, last year, there was about 2.2 billion worth of grants for SMEs to digitalize. And then and then most recently in our stimulus package recently, there was additional, 1.5 billion worth of funds, loans, and everything, grants dedicated to help SMEs digitalize. So there's a demand for digital solutions, fintech solutions in the system right now. And so there's a big opportunity for that. I'd also do a plug in terms of investors too. We're also trying to get as much international investors into our system as well. And so one of the things that was announced in the recent stimulus is like matching funds for investors that are interested to set up shop here in Malaysia. So plenty of things happening. There's big opportunity because there's the demand side of it, and now the increase in confidence from the consumer side to adopt tech in general, fintech in particular. So there's a lot of stuff happening.
Thank you. I think there are lots of key messages that we've covered over the last few minutes of this session. So number one, what you're saying is that the digital infrastructure to further promote the digitization of the economy is well ahead in terms of its maturity, and a lot more is happening, including collaboration on the infrastructure across ASEAN countries. The second big piece is really around completely new phase of banking in a way that has not been done before, through a new consortium of players coming into this thing. And the third thing is that the market opportunity to tap, given is almost virgin territory. They are only now starting that digital journey. And in many countries, they are only as well. It's actually been in the informal sector. So there's a wide space that is available to be tapped into. And with supportive policies and regulation, from what I hear from the two of you, you are actually giving a beacon call to the world to say, come and invest and do more with us. Thank you so much. With that, we are right on the hour for at the end of this session. Thanks a lot for being part of this. Really appreciate your insights.
Thanks for having us.
Welcome. Thanks for having us.
Thank you so much to all our speakers. Special thanks to all our sponsors, NPCI, Amazon Pay, WhatsApp, Google Pay, and Visa. Thank you, sir. Thank you, ma'am, for being here with us. Thank you.
Thank
Thank you.
you.